So to start, obviously we start with Bitcoin. This is testing the highs that was created before in February and in March as well. We are trading above the value area highs of both February and March. March is obviously updating; it can update higher, but February high was 71. We are trading above it. We tried to break it on the 10th. Was resisting below, but today we have broken in this morning's Asian session. Even though the equities are selling off, have been selling off, the crypto markets have been resilient, which is quite odd. And this is in a very much resistance zone still. This potential for rejection is much more than potential for continuation upside. We are still in that large bearish flag that we have seen. It can go higher, but still can reject at any point. We don't have any critical 4 hour FEGs, various FEGs left to unfill or like mitigate, etc., etc. But on the daily, we can see that on the as well there is not much there before around 80K. But on the weekly, as we know and as we can see, is right on that. This is the start of it, but it is still spanning till 75, 75.5 areas. There is strong resistance here on the weekly level, which is going to act like a stronger resistance on price action on 4 hour as well. We need to find strong resistance here and stronger price action that can actually give us some momentum to the downside in this area as well. We are pretty much interested as a higher quality short because indices are falling. The US stock market is very much pressured. The fundamentals across the market is overall bad. The Fed is expected to not do any more cuts through the year. Traders are pricing that in. So all those factors are not really positive for Bitcoin, but the Bitcoin and crypto markets are still going up for some reason and still trying to push higher at least for some reason. So that these are critical points that we need to cover before we do anything. But overall, in a sense, here this is the resistance zone that we have been waiting for. This is what we need to execute on a proper basis, and when we find the rejection, that would be a better trade here. Similarly, on Ethereum, as you can see, the critical levels around that 2130 was tested and rejected earlier, but it was not a solid rejection. We don't see follow-up rejection wicks on the upside on the next red candle, which is something that we know that we need. Generally speaking, that it happens every time there is big rejection, and yeah, that is kind of trying to happen. Like it's trying to recreate that. Further rejection, further stronger rejection around these levels would give us confidence, more confidence to be short. But we know that this 2200 area is still on play as well, where the last rejection happened. But overall, this area between 2130 and 2200, that's the rejection area that we need to worry about, and that we need to plan for, and we need to be ready to execute when the time comes. Value area highs are around 2130 as well from February. I think this is the area that we are waiting for again on similar to Bitcoin to short. Going to Solana, it's a bit a different picture as well. There is not much that we can do on Solana, like logically speaking, because this is the price action is not as straightforward as the others in Bitcoin or Ethereum. There is that daily AVG that price rejected from on the 4th of March. But yeah, these areas around 91, 93 are rejection level price. Earlier this morning, actually rejected from 91, but stayed around 88, 89, 89, not going lower and not giving the kind of rejection that we need. Solid kind of upside wick and red candle rejection that we get generally in these areas. It was not that, it was just a pullback. I think a better kind of rejection needs to be there around this plus minus 91 level, where we can short this as well. But it's a less quality short than Ethereum's or Bitcoin because of the angle of the slope. The angle is much smaller here. So yeah, there is less room on the downside. Obviously, percentage wise, it might be the same, but yeah, volatility wise, that's a trade-off from Ethereum and Bitcoin. So plans are concurrent and plans are very similar across all of these assets. BNB as well, I can see that the big daily fair value gap that is being like targeted to mitigate the big, not so big, like really thin FVG on the 4 hour as well on the 675 area, but the price is trying to like form a resistance here. There needs to be a clearer rejection, even worse than Ethereum, Bitcoin, and Solana. This has no rejection or reaction at all yet. It's something that is trying to actually break out, not really correlating to the others. But if those assets do form a rejection, it's very likely that BNB will as well. Similar to these, very tricky situation in hype as well. Of course, I don't suggest shorting hype as much as I do with the others because of the assets like the higher volatility and all that. Uh, uh, in case we do not like get a solid pullback and the markets start rallying and markets start being bullish for some reason, I think there is this asset Aave that is trying to break out above the POC around 115. It needs to be on our radar. It needs to be there, as it is a possibility that it could give us a bullish trade, as I mentioned as yesterday as well. Uh, but yeah, overall speaking, the pressure that the market has gone like has created through Bitcoin, Solana, and Ethereum, it's difficult for us to see a long trade here. But if there is a long trade to be there, it has to be, I think, better in Aave, which we need to keep a track of. Uh, Obviously, there is no particular clear trade here, as we can see, it's pretty much in the resistance here. The focus 70 to 80% should be on the shorts because I think we are in the short area on Ethereum, Bitcoin, and Solana. It's a clear level. It's the higher quality levels that we have been waiting for, have been patient about. It's a logical move. It's not mid-level. It's a higher level. If it forms a clear rejection, I think that's the kind of trade that we talked about earlier as well. So the focus should be there overall, in my opinion. So that is the view of our cryptos this morning. Uh, of course, we can go through some of the other factors that affect the crypto markets as well. Like we can talk about the heat map that is being created on Bitcoin in the last 1 week or so. We can see the higher kind of liquidity is sitting there. This is a model one. Let's go to model three. The higher kind of liquidity is sitting there around higher levels around 72, 71 has been taken out. This is 48 hours. We change that to 1 week. Yeah, it's being taken out at this point as we speak. And if we go to then liquidation maps as well, the shorts, all the shorts have been almost taken out. Just these few, only around leverage liquidity. Let's see here, leverage liquidity of 1 billion remaining, while the short liquidity, long liquidations are around 2.35 already leading. So this area between 72, 70, 72.2 to 73 areas, if that is taken out, almost all the long liquidity, short liquidity will be flushed, and we would be in a biased market in that situation. If we then continue to the other charts as well, uh, we can see, say, BTC. On the 4 hour, you can see there is large quantities of order blocks that are there on the higher levels around this area. Need to change some of these. Yeah, so that's pretty much it. We can see that's this high kind of liquidity that is coming around here. We are taking out almost all of it. The open interest is pretty much strongly rising around these levels. When that gives up, it is important for where open interest to stop as well. Open interest rising is not good for the price action overall. Stopping and reversing, so that's something that we need to keep track of. Uh, Volume wise as well, if we look at the volume on Bitcoin, it's still pretty much in check. It's not high volume that is coming in. Delta wise as well, if we look at sorry, if we look at the delta, it's pretty much bullish as well. Of course, before many higher like tops, the delta generally tends to pick up and be the highest around that higher level as well. So this is very common. When market is peaking, the delta will be bullish. It's and then sharply reverses as well. So these are the important stuff that we need to also keep track of. Uh, and yeah, that's pretty much about it. I think almost all of it covered. Uh, Market wise, ETF wise, I think this is an unusual situation that is being created with positive kind of ETF situation that is going on all Bitcoin, Ethereum, and Solana ETFs, which is odd, which is not really what the market is seeing otherwise. It's quite odd. So wallet analysis wise as well, we can see this bigger whales and tidal whales, they are turning slightly bullish. Sorry, slightly bearish as well. Slowly, these guys were all kind of bullish a few days ago. Even if we look at the whale tracker, the long short positions, you can see the longs are being weighted, and it's back pretty much flat as well. 50.6 to 49.3. The margin wise as well, it's pretty flat now. The stock margin starting to lead. Overall, yeah, that's the situation that we have in the market. Everything like slowly pointing towards a reversal of situation. The max pain today is around 69 point, yeah, 70 actually, 70,000 areas, and it goes lower by the next few days. So on the 20th, so which is next week, it's around 68. So the price is likely to trend lower, then trend back up in the following weeks. So these are sort of things that are pointing towards the logic of the trade as well. Something that is like pointing towards then upside, like call puts volume, is that puts are also leading here, the call towards the calls. So everything that we are looking at is pointing towards reversal, and we are also at a critical level that we have talked about and that we have planned. So it makes it all the more prudent for us to be ready with the shorts on these assets. That's about it. Thank you.